focus on the less. Live in the hills, but I still get a spread. Started with a little, but I still reinvested. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in at April 6, 2021, and the stock market is gonna go crazy. And I got 3 stocks that I'm looking at tomorrow, but I know I say this a lot, but after what we saw today, tomorrow is going to be a very interesting day, and there's a lot we need to look for. So, depending on what you were holding today, you had a pretty decent day. Every single market closed green. Things kind of came back to normal. Even TLT relaxed a little bit, but we got the minor gap up, and then everything took off from the morning. Now, there was the jobs report on Friday. We were expecting that last week, but I don't think it was the cause. It has to do with a lot of the markets being closed, and that's why tomorrow is going to be really important. It is going to create an interesting effect tomorrow, so I already have another prediction for you, and depending on how that plays out, we might have our work cut out for quarter 2. So, we got a lot to go over. I want to go over what happened in the market today, what we're looking at tomorrow, the plays that we made today, and we actually got to make a cool play. And I think Snake in the Chain is back, ladies and gentlemen. So there's a lot we need to go over. And then I got the plays for tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you want the fastest stock market news in the world, and that's not a confirmed claim, but we like to say it a lot, then yeah, we're the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, as far as tomorrow, I think the first couple of hours is going to give us a general idea of whether or not the chicken or the egg came first. Now, if you don't know what that means, if you watched the stream today, we talked about it, but if you also watched yesterday's watch list, a lot of people were bringing up a lot of reasons why the market went up today. I believe that the main reason was all of the markets being closed. So tomorrow, when everything opens up from Hong Kong, China, Australia, all of that, we're going to see how that affects the market. Depending on the pressure that gives, it will give us a general idea. Then after the close, we are going to see if this rally continues. So what I mean by chicken or the egg come in first is that pretty much all those markets were closed today. It allowed the market to react to some of the good news or all of the good news a lot easier. There was not that much pressure. The bonds did not do as good, but we'll talk about that. But at the same time now, the question is, are all of the global markets going to respond to the exuberance we saw in the US markets, or are they going to kind of do their own thing? So that's the whole chicken or the egg, and we're going to find out tomorrow. So that's what's going to make it key and really crazy, because if they do good and that allows us to do good, then it should be very good. But all in all, though, I'm expecting a little bit more bullishness after the other markets close. So that's what I want to watch for. It's around 11:30, 12:30 Eastern time. We'll get to see how the market moves. Again, we've been watching this for a couple weeks, so how this plays out will be very, very key. But the main thing is going to be what happens. So if anything happens overseas, there is going to be a lot of economic data overseas. We're not going to get too much domestically. Again, we still got the minutes and all of that this week, but unless something goes wrong overseas, it's looking like it should be pretty decent. So that is going to be the main thing to watch. As far as everything else, like we said, the Fed minutes, and I think it could have an effect. Again, considering what we saw last time, it will give us some insight into that whole dot plot issue and all of that stuff. So we want to see how the Fed comes to the decision. However, the main key this week, and we got to hear about it a little bit, and you saw some stocks respond, it is going to be those stimulus or the spending bill negotiations. A lot of people kept coming out about it. We got to hear from it. Republicans wanted smaller, all of that. I talked about this yesterday, but we didn't hear much. So considering how the market did, I want to see how this plays in. But depending on what happens and every day that comes in, it will give us some real information to see how the market prices in. And that is going to be very, very important, because that is going to lead into the next key. It even relates to one of the plays that we made today, but earnings is right around the corner. So don't let the days off and the holidays fool you. You're already entering April. It's going to be April 6th already. I believe you get Apple earnings, one of the bigger ones, on like the 23rd or the 27th. So that's about 3 weeks away. You got a couple of ex-dividends coming up. So this next week or two, you might start seeing company's position. Now, sometimes there's a flush out, and we'll talk about some of that, but as long as anything doesn't develop negatively and we see some of that stability with bonds, you might start seeing the market get into earnings mode very, very quickly here. So that is going to be one of the main things I'm going to be watching. So we definitely want to keep an eye out for that. And then finally, I talked about this a lot today. It has to do with the general market. And even then, even though we're seeing the market hit new highs, it hit that 407 level we were talking about just right beneath there. Although it looks like it's getting exciting, you did not see every single company go up. There was a broader market move, but there was still some losers. And depending on how it played out, it really depends on what you got. So I'm even relating this to the earnings. Make sure you get some time on any of the option plays. But even if you don't trade options, if you pay attention to the option premiums, I really believe they are going to be telling the story right now. It looks like things are coming back to normal. You don't have the same crazy option rush. So now the pricing is becoming a little bit more stable. We got the burn a month. So now the options are going to be the main thing to watch. And even then, though, I'll tell you this, markets can melt up or down without the options going crazy. So if we start to see some of these moves and the options don't really reflect it, or they jump up initially and then even as the stock goes in that direction, they don't go up anymore, that could give you some insight into what the market is really expecting here. So whether you trade the options or not, the option premiums will be a key tell. A lot of people even brought up the VIX, and that kind of relates to it. I'm even waiting for the VIX to rebalance and get back to a normal level, and maybe by then we'll start to see more moves. But either way, there's going to be a lot of activity tomorrow. We're going to get every market open, and depending on how it plays out, this could start to paint the picture for quarter two, and we will see if a lot of that fear dissipates. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different plays that I'm looking at coming into tomorrow, but I actually made 2 plays today. One I purchased, one I sold, but the one that I really like this for a swing trade because we got time on it. We got to react to the news, and the news was interesting, and we caught it early. But that play is going to be SAP, and it's related to Oracle. So the news was that Google Finance, or something around Google's financial transaction system, they said that they're going to be switching to SAP, and this is good for many reasons, but then they were using Oracle, but this wasn't too negative on Oracle. So we brought this up today. If you guys were watching on stream, you'll be able to see what I'm talking about. But when the news came out, you saw SAP got the rip up. It was a nice move, and they were already up on the day, and they were doing good. But when the news came out, even though it seemed negative for Oracle, they did not drop, because even though Google is switching to SAP, it does not mean they were dropping anything from Oracle. So it wasn't as if they were swapping them out. They still use Oracle. There's even big drama between Oracle and Google. So it was an interesting set of news, but all in all now, I thought SAP was a real winner. This is why I like it as a swing trade. If you guys remember in October, they gave a warning on guidance. They dropped. They had their earnings. They didn't do too much, so they fell, and now it kind of gives them room for upside, almost the value stock in a way, but they have moved a lot. So this is why I liked it, and I made sure we got time on it. But then the best part is you got their earnings on April 22nd. So this is what I was talking about with snaking the chain. We were able to make the play. What I ended up grabbing, I only grabbed one. I grabbed a September 165 call, pretty much right back to where they were. Paid $1.55, but a lot of the chains were going crazy, but on the shorter time frames, and it was really, really slow. There was options there. You saw the option chain flash the 5s, the 4s, the spreads were large, but there were some that didn't react, and that's why I took it. If you come to the option chain here, you'll see a lot of it just depends on the last trade. So I bought it. I only paid like a 30-40% premium when a lot of the options were already up 100-200% already. So that was a really, really good sign, but the key is get time. So if you see the options go crazy, look for time, but it's not only to snake the chain, not only to day trade. A lot of people in the chat said they got good day trades, but the main key is getting some of that safety so you have time and can protect it. So that's why I really like the SAP trade. It was kind of cheap, $1.50. It has time. It covers earnings. We got the news. Like I said, it's somewhat undervalued, so I really, really think this one's going to be good, but I think it's going to take time to develop, like the Microsofts that we talked about yesterday. Those ended up going up 100%. You saw good news. It reacted initially, slowed down a little bit, and then it took off from there, and that's why you want time. And now that relates to the second play. So I still like this play, but I did sell out HD. I took profits on some of those leaps, but then a lot of people were asking, and you could even see in my portfolio, people were wondering why their HD contracts didn't go up. So if you were holding anything with like April or May, even though HD made this crazy move move, if you were pretty far out the money, those contracts were still down despite the massive rip on HD. So if you come to the chart, you'll see here with HD, all it did was run up. It's hitting new highs, 52-week highs. It looks great. Some people will be confused. How in the world can you possibly lose money? It even looks like Walgreens too. You can see here with their chart, they also had the run up, but even those April calls we bought a while ago, they're still down 70%, even though they were even up 3%. That has to do with time. A lot of the time ran out and a lot of the premiums got killed. That's why I'm saying get time, especially with earnings. And then if the premiums are going to tell the story, we will see if the market is in earnings mode or not. So either way, I like those HDs, and what I ended up doing, I sold 4 out of 5. So I got almost $5,000. We bought these for $5 a pop, sold them at $11.75 each, and I'm holding one. So they still have a lot of time. The stock has moved up a lot, got all of my initial investment back plus some, and now I can hold one, still get exposure, but now we got some cash too, and it has been on like a 14, 15-day straight run up, hitting those all-time highs, so we'll take it. We won't get too greedy. So I still like HD. I just wanted to take profit, and then maybe, depending on how it trades out, might make some room for McDonald's, but we want to see how that plays out. But again, these could be some of those leaders, especially if you see a broader market move, so keep your eye on them. And then finally, this one gets really interesting. Viacom and Farfetch. Now, there's a couple more, but these are the ones related to the Archegos situation. That happened last week. We talked about it. We were expecting news on Friday, and we didn't. But after the bell today, we got more news that Credit Suisse plans to sell more blocks of all of the same stocks from Archegos, meaning the situation is not over quite yet. So we have not gotten the full P&L disclosure from Credit Suisse. That's what I'm looking for on Friday. We want to see how much did they really lose, and that could give us an idea of the scope of what really happened. But this could be the final block, and if that is, it might even lead to a bounce. But depending on what happens, this is going to give us more information. And then both of those stocks dropped after hours as well too, even throughout the day. So I really like these plays just because I thought it was important last week. It kind of died down a little bit. If the market starts going up, people may forget, but this one may surprise. And even then, keep an eye on some of the financial stocks as well too. But those are going to be the main plays. As far as everything else, I still like the Microsoft. Remember, we got 2 of those May 275s. Those went up 100% now, and that's where it relates to kind of the swing trade on SAP, but we have more time on that. So I still like these. May make one of them free tomorrow or ghetto spread, but like I said, Microsoft is probably going to be the leader no matter what, even if we see weakness. That's why, depending on how the other markets open tomorrow, this could tell us a lot. But take a look at any of these stocks as far as growth and all that. They are actually starting to break out now. So I really like this. I want to watch the premiums. I think they're still a little bit behind. So if they get juiced up, that'll be very good. That's one of the plays I really want to watch. The next play I want to watch is going to be ChargePoint, surprisingly. And then this one even relates to a lot of the EV stocks. The only EV stock that did good today was Tesla, and that's because they had a delivery number and they did good. But some of these EV stocks dropped, and that's because a lot of the people advocating for a smaller infrastructure bill, some people want to take away a lot of the EV and all of that. So you even saw NEO and everything else go down, but ChargePoint was one of my favorites. So I want to see how this one plays out. I still think it's pretty high, and it has the whole SPAC nature to it. We'll see. But this one was getting a lot of eyes, and it was up a lot in the morning and then ended up selling off surprisingly. So I want to see how that one plays out. Then the next play I'm also going to keep an eye on is going to be Netflix. So I still have those leaps. They were down earlier today. They had a weird little after hours move, but then they started to crawl back up. Even if you put it on the daily, you could even compare this to Amazon and all of those other ones. I really like just how it's looking. It looks like Netflix is a little bit better. So the key is going to be with the premiums. I believe those Netflixes are still down, but that's actually why I like it, because we bought them, I think, a couple weeks ago, and then we even had to deal with this big drop and everything. They decayed a little bit, but they're only down 5%. So if we start to see more exuberance and we start to see people come back into these tech stocks, the fact that it's only down 5, I thought it would be down a lot more, and even in the midst of this, it did drop a lot more. So it is kind of sketchy, but I think that could be a good one. So I'm going to be keeping my eye on them. Then I'm going to be watching Roblox. We still have the shares, but the thing I really like about this, it got an upgrade today, but then it did what Roblox does. It kind of like shoots up and then comes down, but it's finally getting some analyst coverage, especially from Goldman. They gave it a buy rating, and they're saying it's overweight. So a lot of people say, what's overweight? It means they want it overweight in that sector, position, whatever it means. So it seems like a lot of people like going heavy on this. So we're barely up on it. I still have it only about like 1 or 2% on the gains, but still holding strong. I want to see, but then you finally got some analyst stimulus coverage. I want to see how that plays out just because it hits these levels and then kind of chills out. The key with Roblox is going to be volume. I think it's going to hang out in these ranges until it gets one of those volume surges, and then after that, that thing is going to be gone. But then again, I own a lot of shares, so we will see what happens. Maybe I just hope. But watch them and then watch United Steel. They ended up dropping. Even oil fell down, so a lot of those reflation trades ended up coming down, so I think that's going to be really key. But like I brought up yesterday, depending on what is said with these negotiations with the stimulus bill, anything from EV to any of those winners, even Caterpillar, I would keep a close eye on those and see how those play out. So watch them, and then I want to watch EasyGo. Again, we bought this a while ago. This is a small float play. We bought it for hype. It's been pretty interesting, but the fact it actually got steamed today looks very interesting on the daily. It actually just looks dead and kind of wants to show some life, but I was surprised a lot of people in the chat were talking about it. I'm still holding strong from it. I think my average is still like $9 on it, or maybe 10, so we're still getting clapped, but it's been in the gutter for a while. But if we see tech rotate and then everything kind of do its thing, it might end up being positive, so I'm going to be watching that. I want to watch Farfetch, again, related to the whole Viacom situation and everything going on. And then finally, as I talked about today, both Intel and Micron. So you could even see here on the daily, Intel had a really, really strong day. You bring up Micron as well too. The question is, are they going to move in tandem? Is one going to be a lagger or a leader? So they got some juice today, depending on how the rest of the world reacts tomorrow. If these keep going, it could start to get a little bit crazy here, so I like those. So watch all of those. And then finally, good old TLT, baby. It actually chilled out today. Surprisingly, it ended up closing red. That means it dropped a little bit, meaning rates rise, but not too much. And now you could see this whole trend. The rates are starting to chill out. Like I said, Thursday was really good. Even today, as the market started to go up and how strong tech was up, they held up. So I think that's great. But now let's bring it back here to the dollar. This is where it gets really interesting, because now you could start to see the dollar is coming down a little bit. It's sold off here. So if it comes back down here, we kind of get a good week or two, depending on what happens. But then you see it skyrocket after dropping, or if it kind of drops, levels out, and stays low, things will be chill. But if it drops further and then bounces up, that may not be a good signal. But all in all, we really want to watch if the tech stocks now stop responding to bonds, but it's not necessarily that they're stopping responding to bonds. People are saying the bonds don't matter. I strongly disagree with that. The only big difference here is that you're actually just seeing the velocity change, and it's changing a lot more dramatically than anything we've seen all year. All year, all it has done was move, and it's moved fast. So the fact that it's kind of putting the brakes on here, it might allow for that rotation to level out here. Tech stocks could come up, identify the winners and losers. If you really want to see if anything's going to go wrong, you either need the bonds to start going crazy again and reverse everything and then say, okay, no, we're not chill, or we are going to see that message in the dollar. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to water it, baby. Don't neglect it. But the code loves you. I love you. And we'll see you in the morning. Let's go.